In this video, I'm going to tell you how to take advantage of the crazy interest rate drop in 2024. So what you want to do, long story short, understand that the 0% interest rate era, I just follow people who know more than me, and they're the ones who give me the information. At the end of the day, we had a nearly 0% interest rates from the central banks, in the States. So many are saying that this won't happen again, and we went, north of 6% interest rates, and everything's going to drop back down. So how can you make money from this, and how can this benefit you? So the quickest way I think that the interest rate drop will benefit you is, number one, understanding that the interest rates that are dropping, understand that you have to act quickly to get a loan, and it'll be easier to get a loan to buy a business or real estate. Because when the interest rate goes down, it'll be easier to buy something and not lose money. Because let's say the interest payments on a loan that you get to buy a business or to buy a building is $10,000 per month, and the business is profiting $12,000 per month, you're going to make $2,000 in profit, and then let's say the interest rate rises, then rises to $13,000 per month in interest payments on the loan that I used to buy the assets. Then I'm actually going to lose money, and when I lose money, I won't be able to, buying a business makes no sense. So the profit margin that you make in between how much money the business is making you and pretty much how much money the business is making you and the interest payments that you have to make, that's the margin of error that you can tolerate. And that's the difference between you buying something that is going to die and you staying in business for 30, 20, 50, 10 years, even 5 years, 2 years, 1 year. So it makes people make really different decisions, because people obviously do cash flow projections and what they think a business will make in revenue or what they think their real estate portfolio will make. But really, no matter whether you do the best underwriting, whether you do the best underwriting, no matter what you do, you'll end up ruining everything if you take too much risk and you don't have the industry knowledge to know how to deal with the risk, and you don't have the experience or hire the people with the experience. So you'll be able to get into deals, long story short, with less experience, because you understand you have less to risk. That's number one. So number two is really making sure that you renegotiate and refinance, because if you're in a deal where the interest payments are at certain rates, you may be able to get out of high interest payments and get into low interest payments, i.e. refinance. And if you're able to do that, you're able to put yourself in a position where you're able to save some money and make some money for yourself, in the business that you've acquired. And I guess the third thing is to remember and never forget that when the interest rate goes up, the value of bonds go down. So bonds are just loans that you can buy. You can buy loans. Anyone who is loaning money out to somebody, it's basically a contract between the person who's getting the money, the person who lent out the money. And the value of these contracts go down when the interest rates go up. And when the interest rates go down, the value of the bonds go up. So it's inversely proportional. So if you're in public markets and you want to make a trade, you can do that. If you actually want to buy loans, you can do that. And if you want to, just remember that it affects the value of everything. So, and I guess possibly the last thing is make sure that you understand that this is from Ray Dalio and a lot of people in economics. They say that when people print money and there's high inflation, the value of assets go up. So huge housing rise. You had a lot of real estate investors appear out of nowhere because 2020, some people say 40% of all money was printed within a year to deal with the coronavirus. So because of this, and I can't even say that the what or the jab that people had to get, but because of this, what ended up happening was people ended up seriously growing the value of their real estate portfolios, because the value of real estate went way up just due to this whole hype because the asset prices went up and money just flowed to assets. It's pretty simple. When there's more money printed, the money goes towards the things that are scarce, like real estate. So remember, the reason why interest rate goes down is because they're not as worried about inflation. There's no need to slow down inflation anymore, quote unquote. So you may watch inflation go up a bit. So bear that in mind as you're working on raising money, and look at what the price of assets do. So with this has been a quick video, and if you like this video, I'll greatly appreciate it if you share this video with somebody who can benefit from it, because the sharing of this video will promote content that can help people acquire assets with other people's money. And if you'd like to set up an asset of your own, consider booking a paid Raises.com consulting deal so that we can set up your private equity deal with other people's money so that you don't have to do it yourself. And with this, we look forward to seeing you on the other side.